Wes-tone here. In this video, we're going to be looking at Bitcoin through the lens of the wealth cycle strategy. Today is November 1st, 2024. So the first thing to talk about when it comes to Bitcoin is power law. I'll put the power law corridor up on the screen so you can see it. This is essentially a mathematical calculus curve. It's an exponential-like curve that the Bitcoin price can be modeled on. Power law is a distribution pattern that's found everywhere in nature, so it is inherent to physics, and it was Giovanni who originally, allegedly, discovered the connection between Bitcoin and power law. You can check out his Twitter page here. He also has a YouTube channel. Plan C also has really great content. Check him out. APSK32 also has really phenomenal content, so check those guys out for Bitcoin and power law. Now, of all the cryptocurrencies, there's only two that are known to follow power law. First is Bitcoin, and the second is Caspa. Some would argue that Caspa has not been around long enough and we don't have enough data to truly confirm that we have a power law, but thus far, both Bitcoin and Caspa follow a 0.95 R squared coefficient of determination, which is very significant. Now, I've been aware of Bitcoin since 2013. It was sometime a few years ago that I realized that Bitcoin was following some sort of calculus curve, and that is when I became fully convinced of Bitcoin's significance. I didn't know at the time it was called power law. And so power law is a distribution pattern found everywhere in nature. When it comes to Bitcoin, it's essentially a byproduct of strong network effects and adoption. And power laws have also been seen in the growth of social media networks as well. Power laws are easily determined by plotting data on a log-log chart, that's log time and log price. Power laws follow a perfectly straight line in a log-log chart. Now, power laws are a dynamic model, which means they are constantly being adjusted and tweaked to fit the data, so it's not a rigid model. But the more data we get and the longer time goes on, the better the fit. You can see Bitcoin, again, it has a 96% coefficient of determination, which is extremely, extremely strong. What that means is the power law slope is responsible for 95 or 96% of Bitcoin's price movement. That's mind-blowing. Before I say something incorrect about power law, because I'm still learning about it myself, I'll just let you go down that rabbit hole yourself. So here we have the power law corridor drawn. This is really just several different power law curves all fit to the data. I'm just going to remove that and manually draw them out myself so that I can extend them out into the future. So now that we've got our power law corridor, now we are going to move on with the wealth cycles analysis. So the first step always is to reduce the noise or increase the signal to noise ratio. And I'm going to do that through a simple moving average. Actually, the first thing I need to do is measure the cycles. So I'm going to just get a rough sense of what the cycles are. It looks like Bitcoin follows very clear cycles just by looking at this at first glance. So I'm going to just try to get a sense of the macro cycle or the fundamental frequency. And Bitcoin is known to have a 4-year cycle, and this particular cycle here actually follows exactly 4 years, 208 weeks. We'll check this cycle. I'm going to measure to somewhere in the middle. This cycle was 187 weeks, a little bit shy of 4 years. This cycle here, it's almost exactly 4 years. So I'm just going to use 4 years as the wavelength. Now we pull up our simple moving average. We want to take 1/4 of the wavelength, so 52 weeks, and offset it by -1/8, minus 26 weeks. And when we do that, we clarify the signal and we get a moving average that fits just over top of the data and provides a nice average. So I'm actually going to remove the price so you can see what that looks like. And that is the fundamental frequency of Bitcoin. And I'm actually going to clarify the signal even more by adding what I would consider to be its ideal frequency, or its ideal cycle. And so I've basically just fit that curve to the moving average. And here's the idealized physics of Bitcoin. It's 4-year cycles, oscillating perfectly within the power law corridor. And this is the spirit of Bitcoin. We're looking at the spirit of Bitcoin here. And it's price action, right? Sometimes we're a little rough around the edges. Sometimes our spirit experiences a little distortion. But the spirit seems to be intact. And it's a very interesting time to be alive. All right, so now that we've got our signal clarified, we're going to measure from peak to peak, and that would put the peak of the next cycle, presumably 4 years out, would be summer of 2025. And of course, that's peak cycle. That's not nominal peak. We could see a nominal peak anywhere in 2025. So actually, this peak might end up going out a little bit further, because if 4 years is our ideal cycle, this peak came about 30 weeks too soon, you could say. So if I add 30 weeks to this, that would give us 238 bars, which would put the cycle peak closer to January of 2026. So our cycle peak could be anywhere from summer or fall of 2025. So let's just look at what's happening here more recently. It looks like our price got a little bit ahead of itself here. Our moving average diverged above the ideal cycle, which you could say is responsible for the recent pullback in price, or the summer lull that we've had. The price got ahead of itself and needed to correct until now you can see the moving average is diverging perfectly in line with our ideal cycle. Perfect conservation of energy. Here, let's just look at this low here, because this moving average didn't do a very good job following the ideal cycle here. We had a very volatile trough. And this is what I mean when I say the nominal price can do all kinds of crazy things, but the fundamental cycle is still going to hold. We had wild extremes during this low. So there's always a possibility to get shaken out, but it didn't change the fundamental cycle. We had an early nominal trough followed by a bounce, which happened when the cycle was bottoming. And so then we basically, to conserve energy, we needed to have another crash, and then COVID happened, and that was enough of a catalyst to really wipe out the price here. So we had an early bottom and a late bottom during this cycle trough here, followed by what might be considered a somewhat early peak, early double peak in 2021. But we had a very nice, well-rounded, fairly smooth crest here, followed by a pretty well-behaved cycle trough here. We got a little bit ahead of ourselves during this section of the bull run, but it looks like we're on track to be breaking out here of 72,000. We're well below the cycle path, so it looks like we've got a strong magnetic pull up to that. Could see some kind of overshoot into early 2025, but it remains to be seen. Generally, as the market matures, we see less volatility, but there's always going to be something to throw us off. One other interesting thing to look at is notice the area between the moving average and the power law center line. Notice how the area above and below that center line is pretty much even. Spends about 50% of the time below that line and about 50% of its time above that line. It's very fascinating, the simplicity. By the same token, our nominal price tends to spend an even amount of time below our cycle and above our cycle. So given that, this more recent move here in the spring of 2024 you could have maybe predicted that we were going to have either a crash to conserve that energy or a long period of sideways motion. And now it looks like we've at least worked off the extension from this move. We've got an election coming up in a few days, followed by more rate cuts. Bitcoin looks like it's going to be breaking out very soon. And as these things go, we never tend to follow the cycle pathway perfectly. So the longer we spend underperforming our cycle, the harder we're going to break past our cycle. So we could see some kind of overperformance like this, which could end up being a nominal peak in the late winter or early spring. But we can really only take it one step at a time. So there was a question out there. The question was, are the 4-year cycles going to continue? That's a good question, and I don't know the answer to that, but I would throw in my 2 cents and I would say that it is likely that they will, assuming that the halving occurs at a roughly 4-year cycle. That gives you a 4-year supply shock. That seems like enough of a catalyst to keep that going. However, conservation of energy, so how is it that as Bitcoin's market cap increases, as it becomes more massive, so to speak, that it could continue a steady 4-year pulse? Because generally as something gets more massive, it slows down in its cycles. But I would say the answer to that is that the amplitude is decreasing with each consecutive cycle. And there's this picture here that shows the exponential decay of those cycle peaks. And so I think as long as that's happening, it is very feasible and possible that we continue to get 4-year cycles. So all things considered, I think the Bitcoin cycles will hold. That's not to say that we can't get some real wacky whipsaw action like we saw in the 2019 trough, but the cycle holds nonetheless. So this goes back to the philosophy of trading, right? If we can identify the fundamental signal and then just fade in to extremes when we get extreme divergences from the cycle, that is our job as traders. That's why we get paid as traders, to reduce market volatility. So that's what we're looking for. We're looking for those opportunities to fade in and out at extreme divergences from the fundamental cycle. So what's your interpretation? What am I missing? Let me know in the comments section. Only time will tell if this video was a total crock of crap. Tickle that like button, subscribe. That's Wes-tone here, signing off. Thanks.